There is a specific pattern in history that has destroyed 3 global superpowers in the last 2,000 years. It is not random. It is a mathematical cycle. And right now, the United States is following that exact same pattern, stage by stage, decision by decision. It is almost like we are reading from a script that has always ended in catastrophe. Look at the Roman Empire. They controlled the known world until they debased their silver currency to pay for endless wars. They collapsed into hyperinflation. Look at the Dutch Empire. They were the financial center of the world until they stopped producing real goods and hollowed out their economy. They vanished from the world stage. Look at the British Empire. The sun never set on their territory until debt and military overextension broke the pound sterling. Within 1 generation, they lost everything. 3 times. 3 empires. 3 complete collapses. All following the exact same 7-stage sequence. And here is the part that should terrify you. The United States has already completed 5 of these 7 stages. We are not approaching the end of the cycle. We are deep inside it. This is the forensic analysis of how superpowers die, why they always believe they are exceptional, and why the math says we are next. It is happening faster than anyone wants to admit. But before we walk through the 7 stages, you need to understand what collapse actually looks like. Most people think an empire dies in a ball of fire. They imagine barbarians storming the gates, a sudden invasion, or a nuclear war. That is the Hollywood version. The reality is far more terrifying. Real collapse is not an explosion. It is a rot. It starts quietly, on the balance sheet, decades before it spills onto the streets. It happens when the cost of maintaining power exceeds the wealth the nation can actually produce. When you spend more to defend your borders than your economy can generate. When you print money to cover the gap, pretending that liquidity is the same as wealth. It is the difference between a house that is burning down and a house that has been eaten by termites. On the outside, it looks solid. The military is strong, the monuments are shiny, the stock market is at all-time highs. But inside, the structure is hollow. This is the state of economic exhaustion. And once an empire reaches this point, it doesn't need an enemy to destroy it. It collapses under its own weight. But how do we get there? It follows a precise roadmap, a map with 7 distinct stops. When you overlay the timelines of every fallen superpower from the Roman Empire to the Dutch Republic to the British Empire, you do not see random chaos. You see a blueprint, a mechanical sequence that repeats with terrifying precision. It is a chain reaction where each stage triggers the next, making the final collapse mathematically inevitable. Here's the map of the death spiral. Stage 1. Military overextension. The empire becomes addicted to expansion. It builds bases, fights wars on multiple fronts, and assumes the role of global policeman. The cost of defense begins to exceed the revenue of the state. Stage 2. Currency debasement. To pay for these endless wars without raising taxes, which causes revolt, the government chooses the silent tax. They dilute the currency. In Rome, they shaved coins. In the modern era, we print digits. Stage 3. The debt spiral. With a devalued currency, real costs rise. The state borrows to pay interest on previous loans. The deficit becomes structural and permanent. Stage 4. Loss of productive capacity. This is the hollowing out. The empire stops making things. It shifts from production to finance. It relies on cheaper labor from rising rivals to feed its consumption. Stage 5. Social decay and polarization. As the economy rots, the wealth gap explodes. The rich buy assets. The poor get crushed by inflation. Trust in institutions evaporates. Society fractures into warring tribes. Stage 6. Loss of reserve status. This is the tipping point. The world loses faith in the empire's debt and currency. Trade partners seek alternatives. The exorbitant privilege of printing the world's money ends. Stage 7. Collapse. Once the credit card is cut off, the implosion is sudden. The currency returns to its intrinsic value. Influence vanishes overnight. You can change the flag, you can change the technology, but you cannot change this sequence. Let's see how the greatest empire of the ancient world followed this script to the letter. Let us begin with the original blueprint, the Roman Empire. At its peak, Rome was not just a powerful nation. It was the entire known world. Its currency, the silver denarius, was the first true global reserve currency. If you held a denarius, you could buy grain in Egypt, wine in Gaul, or silk in Syria. It was trusted because it was pure silver. But Rome fell into the trap of stage 1, military overextension. By the 2nd century, the empire had stopped expanding. This meant the flow of looted gold and slaves stopped. However, the cost of maintaining the legions to defend thousands of miles of borders did not stop. The emperors faced a mathematical crisis. They could not raise taxes because the citizens would revolt. They could not cut military spending because the soldiers would revolt. So, they chose stage 2. They cheated. It started slowly. Emperor Nero reduced the silver content of the denarius from 100% to about 90%. It seemed like a brilliant solution. He could mint more coins with the same amount of silver. He created free money to pay the troops. But free money is an addiction. Once they started, they could not stop. Emperor Marcus Aurelius lowered it further. By the time of Emperor Commodus, the silver purity dropped to 70%. Then, the bottom fell out. By the mid-3rd century, under Emperor Gallienus, the denarius was no longer silver. It was a copper slug with a thin wash of silver on top. The purity had collapsed to 5%. This was the ancient version of printing money. The result was inevitable: hyperinflation. Merchants realized the coins were worthless junk. Prices for wheat exploded not by 10%, but by thousands of percent. The soldiers demanded higher wages to keep up with inflation, forcing the state to mint even more bad coins. The government tried to fight math with force. Emperor Diocletian issued the Edict on Maximum Prices, threatening to execute anyone who sold goods above a fixed price. It failed dramatically. Goods disappeared from the markets. The economy disintegrated into a primitive barter system. Long before the first barbarian crossed the gates, Rome had already died from the inside. They destroyed their money to save their empire, and in the process, they lost both. Now, let us jump forward 1,500 years to the early 20th century. The technology had changed. We had steamships, telegraphs, and machine guns, but the mathematical pattern remained identical. In 1914, the British Empire was the largest empire in human history. The sun literally never set on British territory. The pound sterling was the currency of global trade. As good as gold. But then came stage 1 and stage 2, war and debasement. To fight World War I, Britain had to suspend the gold standard. They began borrowing heavily and printing money. By the time World War II ended in 1945, Britain was technically bankrupt. They had won the wars, yes, but they had lost their financial sovereignty. They owed billions to the United States. Their debt to GDP ratio had exploded to over 200%. The exorbitant privilege of the pound was running on fumes. The moment of truth, the undeniable stage 6, arrived in 1956. This event is known as the Suez Crisis. Britain, along with France and Israel, launched a military operation to seize the Suez Canal from Egypt. Militarily, it was a success. They secured the zone quickly, but financially, it was a death sentence. The United States did not approve of the invasion. President Dwight Eisenhower did not send troops to stop the British. He did something far more lethal. He threatened to sell the massive reserves of British pound sterling bonds held by the U.S. government. He threatened to crash the British currency instantly. Britain had no defense. Their central bank reserves were empty. They were forced to withdraw their troops in a humiliating defeat. They did not retreat because they lost a battle. They retreated because their credit card was declined. In that moment, the world saw the truth. The British Empire was no longer a superpower. It was a subsidiary of the United States. Over the next few decades, the pound sterling was replaced by the US dollar as the global reserve currency. The empire dissolved. The colonies declared independence. Britain descended into decades of stagnation, inflation, and irrelevance. They learned the hard way that military power is an illusion if you do not have the money to pay for it. Finally, let us look at the Dutch Empire in the 17th century. Most people forget that before the dollar and before the pound, the world ran on the Dutch guilder. The Dutch invented modern capitalism. They created the first stock market, the first multinational corporation, and the first central bank. For nearly 100 years, Amsterdam was the financial center of the universe. But they fell into a trap that is terrifyingly similar to the United States today. It is called financialization. This is stage 4, loss of productive capacity. As the Dutch became wealthy, their standard of living rose. Labor became expensive. It became cheaper to manufacture goods in other countries, specifically in England. So, the Dutch capitalists made a logical business decision. They stopped building ships and weaving textiles at home. Instead, they moved their capital into banking, lending, and speculation. They became a nation of bankers, not builders. They started lending money to their rivals. They literally financed the rise of the British Empire because the interest rates were better in London than in Amsterdam. It looked like they were winning. The Dutch elite were richer than ever. The stock market was booming. Art and culture flourished, but the economy was hollowing out from the inside. They were living off the interest of past achievements. They had traded their productive power for financial leverage. When conflict inevitably broke out between the Dutch and the rising British Empire, the reality became clear. You cannot fight a war with bank statements. You need ships. You need steel. You need a domestic supply chain. England had the factories. The Netherlands only had the debt. The decline was slow, then sudden. The Dutch guilder lost its status as the reserve currency. Capital fled Amsterdam for London. The Dutch Republic did not disappear, but it retired. It became a museum of its former self. It proved a brutal economic law. Financial wealth is not real wealth. Production is real wealth. And once you stop making things, you stop being a superpower. 3 empires, 3 different eras, one single mathematical conclusion. Rome proved that you cannot debase your way to prosperity. You only print your way to hyperinflation. Britain proved that you cannot borrow your way to power. Eventually, the creditor owns the debtor. The Dutch proved that you cannot finance your way to wealth. If you stop building things, you stop existing. When you combine these lessons, the law of imperial collapse becomes clear. It does not matter how big your army is. It does not matter how sophisticated your technology is. If you violate the laws of economic spending more than you earn, debasing your currency to hide the truth, and hollowing out your productive base, the result is always the same. The math does not care about your flag. It only cares about your balance sheet. Now, take this transparency template and place it over the United States in the year 2025. The match is not just close, it is exact. Now, let us perform a forensic audit on the United States of America. We will not use opinions, we will use numbers. Let us see how many stages we have already completed. Stage 1. Military overextension. Just like Rome and Britain, America has become the global policeman. We maintain over 750 military bases in 80 different countries. We have active troops in over 150 nations. Our annual defense budget is over $850 billion. That is more than the next 10 countries combined. We are paying to defend borders halfway across the world while our own borders remain porous. The cost of empire has exceeded the revenue of the state. Status: confirmed. Stage 2. Currency debasement. In 1971, President Richard Nixon closed the gold window, turning the dollar into a pure fiat currency. Since then, the dollar has lost 98% of its purchasing power against gold. Look at the M2 money supply chart. Since the year 2020, we have printed over $6 trillion out of thin air. We are not shaving silver coins like Nero. We are clicking a mouse button at the Federal Reserve. The mechanism is digital, but the debasement is identical. Status: confirmed. Stage 3. The debt spiral. The United States national debt has crossed $36 trillion. That is 120% of our GDP. But the terrifying number is the interest. We are now spending over $1 trillion a year just to pay interest on that debt. We are spending more on interest payments than we spend on the entire military. We are borrowing money just to pay the interest on money we already borrowed. That is the mathematical definition of a death spiral. Status: confirmed. Stage 4. Loss of productive capacity. Like the Dutch, we stopped building and started financing. We gutted our manufacturing base and shipped it to China, Mexico, and Vietnam. We run a trade deficit of nearly $1 trillion a year. We rely on our greatest geopolitical rivals for essential medicine, advanced electronics, and even components for our own weapon systems. We have financial wealth, but we have lost industrial sovereignty. Status: confirmed. Stage 5. Social decay. When the economy hollows out, society fractures. Trust in U.S. institutions, Congress, the media, the judicial system is at all-time lows. The wealth gap is the widest it has been since 1929. We are a nation divided into hostile tribes, unable to agree on basic facts, let alone solve complex problems. The internal cohesion required to maintain a superpower is gone. Status: confirmed. The audit is complete. We are not heading towards the pattern. We have successfully ticked 5 out of 7 boxes. We are standing on the precipice of stage 6. So, what happens next? If the pattern holds, we move from internal decay to external rejection. We enter stage 6, loss of reserve status. This is not a theoretical future. It is happening in real time. Watch the actions of global central banks. In the year 2022 and 2023, they bought more gold than at any time since 1967. Why? Because they know the pattern. 2. They are dumping U.S. Treasury bonds and buying the only neutral asset that cannot be printed or sanctioned. Look at the geopolitics. The petrodollar system, the arrangement where the world had to buy oil in dollars, is fracturing. Saudi Arabia is now open to trading oil and other currencies. The BRICS nations are building a payment system to bypass SWIFT. When the world no longer needs to hold dollars to trade, those trillions of excess dollars currently held overseas will come flooding back to the United States. That flood triggers stage 7, the collapse. Do not imagine a zombie apocalypse. Imagine a massive repricing of your life. It looks like a currency reset. The government will face an impossible choice. Default on the $36 trillion of debt, which destroys the banking system, or print the money to pay it off, which destroys the currency. History shows that governments always choose to print. The result is high, sustained inflation. The cost of living doubles, then triples. The standard of living for the middle class evaporates. The United States will not disappear. Britain did not disappear. Rome did not disappear. But the empire disappears. We will likely see a new Bretton Woods, a global conference where the rules of money are rewritten, perhaps introducing a central bank digital currency or a gold-backed basket to restore trust. But in that new system, the United States will no longer have the exorbitant privilege of printing wealth. We will have to work for it, just like everyone else. We are simply waiting for our Suez moment, the trigger event that makes the math undeniable. History is not a mystery. It is a map. You now possess the exact blueprint that destroyed Rome, the Dutch Republic, and the British Empire. Most people will sleepwalk into stage 6. When the dollar loses its status, they will call it a black swan or an unforeseeable tragedy. But you know better. You know it is simply the mathematical conclusion of the cycle. Now you face a choice. You can ignore the pattern and hope this time is different, or you can accept the reality and prepare. We are currently tracking the final transition from stage 5 to stage 6 in real time. If you want to see the signals before they hit the headlines, and if you want to understand how to position yourself for the reset, subscribe to this channel. Do not become the liquidity for the next collapse.